All right, good morning, everybody. Happy Thursday. We can see Bitcoin has fallen off a little bit over the Asian session into the London session. We're going to discuss a little bit of that. Also, we have CPI coming up. I'm just getting the final steps of this thing going on over here. So yeah, for some reason I had to pop the chat out, so I lose it every time I mess around with something. All right, so there we go. Good morning, everybody. So let's go over here to Bitcoin real quick, if we can, real quick. All right, so here we go. Yesterday was a fantastic day. The day before was getting us bullish. We were looking for the previous day's top to be taken out. That was that little red candle right there. We did take out that high with yesterday's price action. Had a nice strong close, and then the Asian session happened and gave back most of those gains. You can see that we do have a retracement here. This retracement is the weekly range retracement. It's not yesterday's range. It's the entire week. You can see that we have retraced down to the 618 retracement level. We go over here to the weekly time frame. You'll see what I'm talking about. So basically, if this week does what it's doing right now or closes red, that is not going to look good. Now, typically one big wick can be a target back to that direction because we can view that as a pullback. But when you have a bunch of them, that can indeed indicate that price might not be able to close above resistance. Why did we reverse there? We reversed there because of weekly res. Going back into the daily, you can see that we traded right up into weekly resistance, and that's where you found all the pressure. Going into the hourly time frame, so yesterday, a couple people were looking to short this, and I basically told them not to because it was strong, and we were looking for a little bit of bullishness coming into the CPI print. What I expected to happen last night was a range to build in, keeping, hourly support intact. Hourly support is right there, and at 2000 hours, boom, you dropped down through there. That is the Asian session. So at the open, this thing just took off to the downside, and you've seen much more continuation. Right here, this wick will be your London session low. Seeing the price action here with the news coming up, it's hard to say if this is going to stay intact or not. Like, just because we have a low at the London session, it doesn't mean it will be the low of day. So yeah, it looks like Bitcoin wants to trade right back down to where it started from. Sometimes you can get big spikes like that, and then price will retrace the move just to see if that demand is legit. And if it is, then price goes back up. But this little thing, whatever that you want to call this, it almost looks identical to this. Big spike up, and then it just rolls right back over. So that's like a miniature version of this. It's really disgusting price action. It's very, very disgusting. I do not like to see that. It looks more bearish than bullish now. Every single pop gets sold into. So we're probably going to be looking for shorts. The only way I get bullish again from this range is if we get back above this swing high. So as long as we're trading under that swing high, I'll probably look for short side entries. If we go over here to the SPX, you can see that it is not getting hammered as hard. And in fact, you didn't even see any downside until the London session. So all throughout the Asian session last night, the SPX did nothing. This is what I was expecting Bitcoin to do. But it did not. It did get sold off. So you're down 6% on the day, and you haven't even gotten to the New York session yet. So yay. Yay. It's going to be fun. Over here on Euro USD, same thing. Big, strong move yesterday to the upside. Is that a selling event? Well, we shall see. Here is the inflation print. Watch your eyes. Bright screen, bright screen. The inflation rate year over year forecast, they are looking for an increase up to 7.9%. Last month was 7.5%. The previous month was 7%. The previous month before that was 6.8%. Previous month before that was 6.5%. So you can see a trend emerging. You are getting higher inflation prints with every single month. So Yeah, they're expecting 7.9. That will be a 0.4% increase from the last month. You're seeing that the same on this, the core inflation rate, year over year, 6.4%. That is up from 6.0% last month. So the big news, or the big question was this move just basically pricing in what could potentially be a better inflation print than what is expected? Well, when it gets sold off right before the inflation print, doesn't really look great. So this big spike and then resold could just simply be bigger market participants managing their portfolios, taking on or moving big positions. So just be very careful trading today. There really is nothing for me to give you as far as levels on Bitcoin because you've blasted through all the near-term levels. Your weekly resistance is still going to be $42,415. That's this top white line right there. You do have weekly demand coming in right there. So that's weekly demand. It's also known as a Heath level. You can see that it matches up almost perfectly with this week's open. So your weekly opening will be potential support, and it is right there. Now, if we take out yesterday's low, this bullish candle is going to resemble a trap. You did it here. We did take out the expansion candle's low, so we were kind of sort of looking for a trap, but I thought price would go up, hit the midpoint of this bearish candle, then find resistance. So that's where we were looking for. But when it traded well beyond that midpoint, I thought we were going to see a little bit more bullishness. You can see that this wick also indeed took out the high of that big bearish breakdown candle. So all in all, it looked good. It looked good. It looked good for bullish continuation. I expected that we would trade up into the daily resistance or the daily supply zone at $43,189. Or the resistance level at 44,409, and then roll over for a day or two. But that is not what we got. The only reason I'm bullish on Bitcoin is because of the yearly open. It has not been tested. Now, it doesn't have to be. There's nothing in Bitcoin's instruction booklet that says the yearly open has to be tested, right? There's nothing in there. The only reason that I expected it would be is because since we broke down, we have not tested it. We tested it. Right here is your yearly open. That's January the 1st. That's your yearly open. So that is your yearly opening range. What we were looking for is a potential test of that. See if it wanted to hold as resistance like on a monthly basis. Then we could look for more potential bearish price action for the rest of the year. But it doesn't have to do that, right? It does not have to do that. Typically, the way candles are formed, the first initial move after the opening of that candle will be a little stab to the opposite direction, known as a fake out move or a false move. Then you'll have your expansion. But we also have sideways trading. So that yearly range, you can basically trade from the low to the open of your yearly range all year long. But I was looking for that to be tested, as that would be a good signal for me if you ran up, tested that region, and then rejected for more short side continuation. If you get above it, then we can look for higher prices, right? We can look for higher prices. If you notice, since we put in the yearly opening range, you drop below it on this was the first day you closed below your yearly opening range. On the 5th of January, you did indeed test that yearly opening range. So this could be the reason why we have not seen that retest of it since it was made, because it was retested already. And this could be the market saying that, we're going to continue lower. There's a lot of liquidity setting above these three swing highs because of that yearly open. So anybody that took short side entries based on the yearly open, if they are short from $46,205, then that means their stops probably ain't very high from there either. Now, investment firms, they don't really trade with stops. They'll wait until they start to lose a lot of money Well, to us, it's a lot of money. To them, it's still a small percentage of their entire holdings before they'll start to lose money or take off those positions and start a short squeeze. You would probably have to get well above this swing high in order to get that massive short squeeze up into $55,000, $56,000. But with this acting like this, very tight range, very big spikes in both directions, spike to the high side, spike to the downside, one day spike, right back down the next day, makes it very difficult. This can be accumulation happening. Sometimes when a big firm starts to put on a lot of position or a big position, you will get these big spikes and sell-offs and spikes and sell-offs. Maybe price will run below the wick low for a little bit and then start to go. But right now it's so difficult to trade it. We'll just watch the weekly range and see what goes on with that. This is or was my target. But as long as price keeps getting rejected each time it gets a nice push, then we're going to start looking for shorts instead. Simply because that's a sign of bearishness more than it is anything. It can be accumulation, but it just doesn't look good. So if we're going to be looking... So, sorry, I just got a text. So if we're going to be looking... Man, that screwed me up. All right, let's close this out. All right, so if you're looking at this swing low to this swing high being a price expansion or a move to the upside, which it is, right? That's the low, that's the high. If you take a fib level from that section of price, that's not your weekly range. That's just from this swing low to this swing high. You can see that you are indeed testing the 618 retracement of it. Now, we already tested it. All right, so if this is your swing or your bullish move to the upside and this is your corrective phase, you have indeed already tested it. This was a trap. So this was trading out of the trap, confirming the trap. Price should not close below the 618 retracement. If price is going to continue higher, then you should not get a daily close below that. If you do get a daily close below that, you're going to be watching, this is if you're bullish, you're going to be watching $37,994. A close below that, and then this upside expansion is invalidated. All right, it's invalidated. So you'll probably be looking to sell rips at that point. I don't like the size of this pullback, but it is still a legit pullback if you're looking at this range from this swing low to that swing high. This is still just a pullback. But anything lower than 37,994, and we're going to be targeting this wick low. And then we're going to be targeting that wick low. All right, so right now, we're going to wait to see how today trades. I will not be taking any positions on Bitcoin until after the print. After the print. I don't know if I'll trade it after there, but depending on what the print says, and depending on how price action acts a couple hours after, I might take a position and I might not, depending on where we are once that print comes out. So just be careful. I'm not going to say if you got a high print, look for bearishness. If you got a low print, lower than expected, look for bullishness. Because just because you get the news, you have the news and then you have the market's reaction to the news, right? What should happen sometimes will, but I have also seen what should happen, the opposite take place, right? So we'll just be very careful in trading. We're going to watch the main levels. Give me 1 second. I have to make me some water. Woke up to a good email this morning getting my new computer sometime next week. Around the early part of the next week. That'll be fantastic. Once I get the Starlink dish, that'll be even better. So we're waiting on that. All right, let's go over here and look at the DXY, because the DXY hasn't had a very big move either. So there's the big move lower. That's why we got the big impulse move to the upside on Bitcoin. And you can see that today's range on the dollar is a retracement only. So you're setting in that very tight, narrow range. So I mean, is this going to mean that the dollar is going to go higher? Well, the dollar has been extremely bullish. If you look at this candle right here, it was a very bullish day, then closed roughly around the midpoint of it. Then the next day you retraced a big portion of that range, then you found support, and then you moved higher. So even though this is a pretty deep decline, it can still find support down there and move higher. Your daily support level for now is going to be $98, almost even Steven. These two levels are weekly levels. Let's go out here and look at them. You can see that the top level is an old weekly supply zone, and then this is your support zone. So once the supply was put in on this breakdown, that's when you took out and made that a supply zone and took out support, never retested support. If we go back into the daily, you'll see that that top line was like almost beautifully flawless to the decrease, or from where price fell. It opened up right on that line, $99.11, and it just simply dropped. So it's in an uptrend, right? You can clearly see that it's in an uptrend. We've been bullish on the dollar for months and months. Since October of last year, we were bullish on the dollar because that's when we knew that interest rates were going to get hiked. So this is the dollar pricing in that hike. Next week will be the interest rate decision. So we got a lot of volatility ahead of us today and into next week. Euro USD, big move lower. This is a pullback only. Right now you can see that you hit oversold regions and you did come out of there pretty strong. So if the dollar's going to see more downside continuation, you could get another spike up to here. But, it's one of those things, right? You want to stick with the trend. The trend is your friend. So we'll let this thing find resistance and then roll over. If it wants to go higher, the only time we switch our bias on Euro and get bullish is if you take out this swing high up here. Once you take that out, then you will have made a statement, because that's where that big range built in for like a couple months. Then you made your fake out move and then the initial push lower. I think this probably has more room to go with what the U.S. government is doing with oil. We're probably going to see oil find support. You can see we have support down here at 108.03. Big move yesterday to the downside. This is why the dollar came off. Bitcoin, everything else had a nice pop. But if they're going to ban the U.S. from purchasing oil from Russia, I don't know how much oil Russia, or how much Russian oil we purchase, because I'm not an oil guy. Most oil people will know exactly how much oil we purchase from Russia. If we're not going to be allowed to do that, then that could make demand higher. We're going to need oil so that can continue price to move up. They're already expecting it to be hit at the pumps. So at the fuel pumps, they are already starting their assault all over the media about how Americans are not afraid to pay a few dollars extra on gas to support the Ukrainian people. So the United States of America's government is using the war between Ukraine and Russia to move into their process of a self-sustaining future. So of crushing oil. And they knew it was going to hurt normal Americans. Like I said Tuesday, in inflation, the rich don't get punished. The working class do. If you're only making $500 a week at your job and gas prices are at $7 a gallon, they've already hit record prices. If you have to drive more than 10 or 15 miles to your job, that's going to really affect you. You're going to have to look at yourself and say, at these prices, is it cheaper for me to stay home or go to work, right? So we're going to see what's going to happen. Nobody can stop them, I don't guess. Or nobody wants to stop them. All the news outlets are talking about it, so we could see higher oil. So watch that support at 108.03. If you lose that support, the next area will be your old resistance, this swing high. That's your last resistance from the range. That's where you got the breakout. So if you lose this level, you could potentially see oil get back down to 94.76. That would be fantastic for fuel prices. It would. But like I said, it looks like they're going to go on and do the transition. So oil is likely going to move higher. All right. So be prepared for that. And another thing you could do potentially if you live in America, if you're sitting on a quarter of a tank, go ahead and fill up. I mean, just go ahead and fill up because the prices are probably going to start going up week by week at this point. Usually oil can go up for a while before it really starts to get affected at the pump. But now that effect is here. And this big spike was a big one from $90 up to $128. That is a big move, right? Doesn't look like a big move, but if you look at it in terms of a percentage gain, that is a 43% gain. That is a big move, guys. Huge move. So that is a lot of volatility in oil. The people that are indeed getting blessed from all of this is Aussie, the AUD. The AUD has been extremely bullish, and you can see that it's very bullish today even. Aussie yen, not so much. You're into resistance. We looked to take a short on this Tuesday. That short was successful, but we were on the wrong side of the market. Anytime you choose to take a short in an uptrend, you have to take profits at your target region simply because you're on the wrong side of the trend. So there is a very good chance your trade will be stopped out, but you can still take the trades. Just understand that being on the wrong side of the trend is typically not where you want to execute a trade. But it was a flawless trade. It was an absolute perfect opportunity. It was over here. We discussed it Tuesday morning, just like we're discussing things today. Traded right up into that hourly Heath level. You knew to watch that level before the stream was done. And look at that absolute perfection. Traded right up to it. At this point, order flow is bearish. Trades right up into supply. At your entry, target, low of day. There's your target. Boom. Then you bring your move, or you take your stop loss and you move it down to break even. After you take profits, that way if price goes back up and completes the trend or finds support and then starts to go up again, your trade was still successful. And that's what matters. But it looks like it's finding support. You're into another potential resistance area. But if oil keeps climbing, so will Aussie. Also, iron ore is affecting Aussie. There's a lot of commodities right now that are affecting Aussie. So that's why it's not going lower in a risk-off environment. And the SPX looks primed to head lower. So if we go back over here, let's go to the daily. It looks like it wants to go lower to me. That's a nice little spike. You are getting these insignificant moves lower, right? So like what we discussed on Bitcoin, Wyckoff accumulation, it's nothing more than a 3-drive topping formation. That's distribution. Accumulation is a 3-drive bottoming formation. It's when you put in these swing lows, then you rotate out of there, then you come back into them, break down and close below them, and immediately retrace. That means you are finding less and less supply, more and more demand. So this could be a bottoming formation. But with that being said, you're having a down day today. What you want to see if you're bullish or if you think this is going to be an accumulation pattern, you will watch daily demand. So longer term, you're in an uptrend still, but near term, you're in a downtrend. This is a daily chart. So your downtrend level, really and truly, you wouldn't want to get too bullish until you get above that obvious downtrend. All right, you haven't been able to get above it. So until you are, you're still bearish. But you do have a demand zone right there at 41.86, and then you have support directly under it at 41.53.30. It does look like a bottoming formation to me. So on this swing lower, you didn't even close below the low. Oh, did you? Yes, you did, just barely. You barely got to close below, then you pushed down, and then you instantly bounced. You traded sideways for a solid week, and then you got your continuation. But you still haven't taken out this swing low yet. Your pushes are getting shallower. Typically, what we want to see for a downside move to continue is we want to see, once the swing low is taken out, we want to see that tested as resistance and then the continuation. You're not really getting that here, so you could potentially be seeing this thing bottoming. So watch that trend line if you want to be on the safe side for looking for bullish entries. But if you think you can nail the bottom, watch those two levels down there. I'm not going to buy it down there, right? There's just too much stuff that's coming up. Hopefully this move was the market pricing in the higher interest rate hike. Hopefully that's what this was, and then the market starts to get bullish. There's just nothing bullish out there, right? Nothing bullish. So, the near-term trend is down. I would probably be more keen to selling rips since we're down here, even though I do see this bottoming formation. The problem with trying to find the Wyckoff accumulations or the Wyckoff, distributions is they take so long to happen. So over here, if you remember, this took a long time to happen. This was the same thing that we're looking at now, right? You got this, but it takes for a long time. So once you put in that swing high, February, March, April, so 3 months of making higher highs. And then finally, when you put in this swing high, took out the swing low, you put in a lower high. So that's what you'll kind of be looking for to occur on SPY if it's going to go up. So this is like more macro than it is near term. Near term, we're not going to trade it today. Near term, we're bearish. This is more macro. So what you're going to want to see, similar to the SPY, if it is indeed reversing, where's it at? I don't even remember where. There it is, this one. You're going to want to see something like this come up, take out that swing high, and then come in and put in a higher low. That's what it would look like, similar. So you can see how far you are away from even calling that. So what we'll do, we'll pay attention to it. We'll notice it. That'll keep us from getting extraordinarily bearish. We'll wait for resistance to get short, right? Not shorting this. You are not into any big level. The only thing you did yesterday is you took out this day's high. That's not bearish. You are rejecting, and it could indeed reject, but that's not a bearish candle. So wait for either supply up there at 43.11 or resistance here for the potential shorts. Closer to that trend line for a new short entry would be better, in my opinion. I would much rather take a short up here and be wrong if you get the breakout than take a short down here and be much wronger. You know what I mean? There's just not enough squeeze on it. If my target is there, price is there, where's my stop going, right? So if we wait for price to get a little bit higher, then we could potentially look for those short side sets until something bullish happens in the news. Thanks for all your videos. Shop, please. Yeah, we'll take a look at shop. Let me just scroll up real quick, make sure I'm not missing anything important. Greetings from Nigeria. Greetings, my friend. I am short your Euro USD from one spot 1047 for our breakdown. My target is 10938. So I'm assuming you got short in the middle of the night. All right, let's see the 4 hour. Let me see. I lost your comment. Where did it go? There it is. 1047. All right, so you took the short off of that 4 hour level there. Well, I mean, here you're in a downtrend, and this spike in price can absolutely be sold into, as typically they do. So that's a little bit higher than your entry. You said your entry was 1047. So let's go ahead and see where exactly you are. 1047. So So not much lower than that. So, I mean, yeah, that's typically what you would have done and then aimed for the daily low. It looks like you reversed. Nope, you took it out, right? So that's where I would have been taking profits. So this is your entry, and this was the daily low. So on this candle, you did take it out. It's just not a big range because right now it's just, well, it was 20 pips to be fair. I would have taken it too. So yeah, I mean, it's just that's such a big move, right? So people are going to be looking to buy it for that bullishness to continue because retail loves to try to pick bottoms and tops. So now that you got a big spike like that, they're going to assume that it's going to be bullish. And it could be, right? It could be. But I don't like shorting into strength. When I see a pop like this and I'm looking for that pop to get sold into, I rather want to see it like, chop around a little bit for a day or two, really, for like, 2 days, then find resistance again and start to head lower because you can get a little bit more momentum on moves like that instead of trying to short the very next day. So, all right, for instance, always keep this in mind. When you have a big range daily candle like this, almost always the very next day is going to be a small range day like this, right? Because this is going to be looking for continuation. So a measured move off of that would put you at a higher price. This is just a rough estimate, but something like that. That's what people kind of look for when they see big range candles, whether it's to the upside or the downside. So in my opinion, the trade on Euro USD would be tomorrow. And then if I'm bullish, I would look for today's low to get purged. Then I would want to see that trap on like the hourly. Then I would look to get long on the retest of the resistance or the support level that's put in when that trap occurs. So you liquidate the low, then you get enough liquidity to make that push higher. In trending conditions, you always want to give it at least a day. So like here, which is not a good example of it. I can't really find one because of all this choppy mess. So like this. All right, so this is just flipped. But you can see the next 2 days, you see how small range they were, right? So you would have been looking for downside continuation. What we would have expected was for like this candle to trade up a little bit into this candle's range, like to this wick low, right? Trade sideways for the rest of the day. Then the next daily candle opens, runs up above that swing high, and then puts in the swing low. But this was just so weak. You did get 2 small daily ranges, but they were kind of lower, right? So it's not exactly what I'm looking for, but you kind of get the idea what I'm talking about. You get these big range days, you'll get the 1 day or 2 day small pullback. So yeah, I like the fact that you're looking for lower prices because you're in a downtrend, but I would rather you have taken the short like up above this day's high instead of down near the low of day. All right. I like the short. You did good. If you took profits at the daily low, you did exactly what we're looking for. The only thing is you did take it near the low end of the daily range, and that's okay. That's 100% okay as long as there's meat on the bone as far as pippage is concerned. And that's a 20 pip move. It doesn't look like it because we've had so much volatility, and that's like a 500 pip move, but that's a 20 pip move. So, I mean, that's a legit trade. But it looks like you're probably going to get stopped out soon. There is a resistance level here on the hourly. Right there. So you got an inflation print coming up today at 8:30. And you're likely to going to get a big spike in either direction from that print. This range is very, very big. And from that line to that low is only 20 pips. That's so crazy, man. Things are moving, guys. 51 pips, 52 pips. that spike. So, I mean, yeah, either this high is going to be the target at the inflation print or this low is going to be the target at the inflation print. And the only two areas that you have for potential support or resistance is that one and this one. So, yeah, I can't tell you. Hopefully you took profits is all I can say. Because it looks like you're probably going to get stopped out. Definitely take profits. Or if you didn't take profits, at least move that stop down to break even. So that way if price comes up and tabs you out, even if it rolls over and goes your direction, you can't expect that. You have to trade like a robot. Setting in a losing position is 1-800-our fault. 1-800-our fault. If you set in a losing position, it's your fault. You do not have to do that. You can close the position and re-enter it lower, even if it continues, right? But when I take my entries, I'm always aiming at the daily low, and you got that daily low right there. You took it out. See, that's your daily low. That wick took it out. That's where you would have been taking profits. Hopefully that helps. It was a little long-winded of an answer, but yeah, I don't like trading right in front of a big news print because typically things don't move. Good morning. I've been trading crypto for a while. Any advice for someone starting out trading Forex? For example, do you use multiple monitors? You can trade with one monitor. When I first started, it was with a laptop and one monitor. You do not need multiple monitors to trade. Does it make it easier if you have multiple monitors to watch multiple assets? Yes, it does. Of course it does. But at the same time, I don't know your circumstances. Are you working from home? Can you afford multiple monitors? You don't need them, but they can help. I have 3 monitors, 27-inch monitors, 3 of them. That is all the screen estate I need. Some people like to ball out and have 20 monitors. That is nothing more than a flex. You do not need more than 1 monitor to trade. You need 1 chart and 1 brokerage, and you can trade. You do not need it. But it does help because like I watch multiple assets. I'll have the SPX, oil, dollar, most of your stuff like that. And the majors, Euro USD, USD CAD, USD JPY, all pulled up. Right? And then I'll be on the other monitor looking for news or messing with Twitter or just talking with people, whatever. But you only need 1 monitor to trade. As far as transitioning from crypto to Forex, it's the same thing. It's a 24/7 or 24/5 market, so that is the one difference, but it is a 24-hour traded market just like crypto, but it closes up on the weekend. That may change in the future, we don't know, but as of right now, FX is a 24/5 market. As far as FX is the most liquid market to trade. There isn't really anything that is more liquid other than some government bonds and stuff like that. But as far as liquidity, Euro USD is the most liquid asset in the world. Billions and billions of dollars. The FX market is responsible for trillions of dollars a day. So very much liquidity in it. It's a very good market to trade. I love it. It's my favorite. But I only trade from 7 to 10 in the morning. I do not trade after that because my strategy is to find the beginning of the daily range move, or at least, the biggest part of it. But you should be able to make that transition, no problem. Depending on where you live will determine your broker, so I can't make any suggestions on brokerage. If you live in America, I use Oanda, Forex.com. Most of your brokerages in America are good. If they're in America, they're good brokerage. That means they fit the stringent policies that America has set on those brokerage firms. But yeah, and whatever strategy you're trading in crypto should be valid in Forex. Good morning, Heath. Can we SPX if any entries? Yeah, we did discuss SPX a little earlier. And you probably wrote that at the beginning of the stream. Good morning, Heath. On Bitcoin, can you check trend from all-time high with the high on 10 Feb? Yeah, let's go look at it. Excuse me. Over here. Goodbye. So all-time high to Feb 10. That's not even right. I need the trend line. All-time high to Feb 10. Boom. Yeah, this is what I hate about trend line. Like, you can have this trend line here. This was the trend line that I was watching for the breakout. Like, just to say that the downtrend was busted, which we can see that now, and it's just been sideways. But you can make trend lines galore on this thing, right? Especially from that all-time high. There's another one you could probably watch. I know at the beginning of this downtrend, people were watching this one. This was the first breakout they were watching. And now we know for sure that wasn't right. But yeah, trend lines are very subjective. It depends on where you're tacking it to. But looking at your trend line, it does look like price is trying to respect it. But now you're back under it. So, I mean, do you trade the trend line? Right? So I'm assuming people were, Red Bull burps. I'm assuming people were expecting for when this happened here, for it to come back in and test that for support, which could have been because that was also roughly about the midpoint. Yeah, right there's the midpoint. So that's probably why you're getting a big move lower, a lot of the liquidations occurring. Intraday, you can see it, right? People are starting to try to get long at that trend line. And then boom, breakdown. So, I mean, I'll look at them just to see where the breakout is, or if there's a breakout, something like that. But as far as taking trades off of them, once you trade up and through it and then down through it again, it's pretty much done. The whole purpose of a trend line is to encompass a price range, right? That's the purpose of them. So when your trend line is busted or broken above, then you have to wonder if there's any validity left to the trend line, unless there's a trap, right? But as of right now, it looks like the price wants to go lower. But with the news coming, we have to be very careful about trying to get positioned ahead of the news, thinking we're going to get lucky and get a massive spike in our direction. Just be very careful when doing that. Notice how you're not around any major levels. You're pretty close to yesterday's open. And there's yesterday's low. So I guess you are kind of close to yesterday's price ranges, but really nothing else on the bigger time frames. And when I go to the hourly time frame, you can see it looks like continuation. I mean, as long as you're closing hourlies below this hourly candle right here, you have to look lower. That's your hourly res, 39,398. So if you get an hourly close above that, then you could potentially look for another move up to 40719. But if that holds, then you're looking lower. Next potential area of support. So that's that daily range open and a daily low. But I mean, next hourly support level is the 38,507. So if this level holds, you could potentially see price come down to here. Right? So there's the open. We'll leave yesterday's open on. And then today's open is going to be all the way up there. It's insane. There's today's open. Big migration up from the open. That's what you want to see for bullish continuation. The entire range was retraced. So, I mean, that'd be a big move to get back up above this swing high. Can this area down here act as support? Yeah, it can. It can, but it's very difficult trading right now. Very difficult, crazy, range-bound price action. And those are big moves. Big moves. Like, we were looking for the high, the previous day's high, which was this wick. Once we got above that, that was our target. And you got all this more. So that's from this swing low to that swing high is a big move inside of the range. So that's 38. It's a $4,000 move, $4,000 range. It's big. It's big. This is like normal price action over here. These are your normal moves, When you get stuff like that, stuff like this, and then stuff like that, it just makes it difficult. It's not really following any, normal price action. When we're looking for daily range expansions, we're looking for continuation, right? When you're trading the expansion of a daily range, that makes you a trend trader by default. You're looking for a trending candle. You're looking for the previous day's low if you're short, or the previous day's high if you're long, to get taken out. So when you do something like this, you look for that to have bullish continuation, but you're inside of a bigger range. And I can even do you one even better if you want. This was a good spot to look for shorts, where it was. So if you were looking from this swing high to this swing low and trying to get your retracement, there you got it. 618 retracement right there. Boom, boom. So is that why we're seeing selling? Yeah. Look at the trap above the 618. There it is. A nice wick above. This first initial move was to draw in retail. It's going lower, baby. Then you go up in here. Boom. Close above. Then they switch and get bullish. And then price just poof. It's very difficult to trade. What you need to do if you're new, I suggest, is you wait for the lower edges of the ranges to look for your trading entries, and the higher time frame ranges to be fair. Like down in here, 37,763 could be a good spot for potential entry. That's where we were watching. We were watching weekly support at the beginning of the week, and it held fantastically. Monthly support is down here as well. I mean, there's just so many technical things going on. I can find trades on both sides. And when you can do that, really makes it difficult, right? There's weekly support. Here's monthly support. So you can see price is trying so hard to stay around those two areas. That smells bearish to me. When we put in this move right here, away from the weekly support, away from the monthly support, the fact that we came back in and retraced completely is just crazy. Then we did it again. Now we're back again. It's just, what is going on, right? So when it's doing this, I suggest you watch your higher time frame levels and then look for your entries close to that, all right? So don't try to take a buy here. You haven't done anything. You haven't tested the open yet. And if price is just migrating around that open, you can pretty much almost bet on it getting tested. So at least wait for that. But things can get front ran. I'm at a loss right now. I thought we were going to see bullish continuation. I thought we would see a little bit of sideways price action into the news today, and then get that expansion, maybe higher if inflation misses expectations. If inflation beats expectations, then we could see a whole nother move of lower price action. And unfortunately, I don't want to do this, but I'm going to go ahead and do it anyways. So since you're downtrend here, this is your expansion. This is your corrective phase. So this is a measured move. Oh, wait, no, I'm doing it wrong. Sorry, apologies. You got to go from the swing high. Here's your measured move of what you could potentially see if we lose that support. This support down here. If this gets taken out, and it's been tested a couple times, this is what you're going to be looking for. So let's level this up. This is just a longer term macro thing, right? That's longer dated out, but something like that. That puts you down at $22,000. That's a measured move from this impulse move to the downside, taking from the wideness of this chop. If this occurs, if you break down, this is going to be the target. Potentially. Like, that's what you're looking at with this pattern. Longer term. I mean, the downside move is still intact. You did take out the downtrend, but you're not getting any bullishness, are you? So if you put a trend line from there to there, and then say from here to there. Oh, sorry. What does that look like? That looks like a longer term bear flag, right? That is a longer term bear flag. There's your pull. Here's your flag. Now, if price keeps going in this, then the flag is invalidated. But typically what you want to see is you want your flag to be in size about a third of your pull. So you're getting to the point to where if this is a pattern that's going to play out, it's getting really close to being exhausted. I mean, that's just your traditional technical analysis, all right? Your bear flags and stuff. But if it is a longer term flag, each time you get a pop to the highs, you get met with heavy selling pressure. This pop almost completely exhausted. So that's your support, resistance. And then if you lose this support down here, that longer term measured move could potentially play out. And that would put you down at a very, very good level to look for potential buying. We get down to $22,000. I am a bull on Bitcoin, mega bull, because your all-time high is 20. Although what happened in the past, Bitcoin's never retested its old all-time highs ever in any cycle before. But, past performance is never indicative of future results. Never indicative of future results. And the higher you get in price, also, as far as, how expensive an asset becomes, the more likely an old all-time high test is. And then one other thing, we'll leave log on. If you look at your yearly right here, you can clearly see a resistance level right there. So depending on how much bearish momentum this asset gets, that's obvious resistance. You can tell by that test. That is very, 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 very bearish and unlikely. But, that's a fantastic place to look to become a bull on Bitcoin if it ever gets back down there. Your old all-time high is here. So what we're looking for here at Trade Talk is we're potentially treating the yearly low, the 2021 yearly low, as the region where we could potentially start to see price turn around. So let me get to the daily over here for this. Stretch it out. So this over here, this is the 2021 low. All right, that's your 2021 low. Didn't test it. Didn't test it. Didn't test it. Didn't test it. So a measured move from this bearish impulse after this corrective phase, or bear trap, if you will, would put you right down underneath that $27,000 region, underneath all of this liquidity. How many liquidations do you think will occur at under 27,678? A ton of them. There's a lot of people that doesn't even think you're going to ever see $27,000 Bitcoin again. But that's where we're looking to become buyers. So anywhere from now until March 2024, this is a very big range of price. But this is where we're looking to be potential buyers on Bitcoin. Right in there. Anywhere in here. All the way up into March 2024. Right? That's just what I'm looking for. It doesn't mean it'll happen, but that's what I'm looking for. And it's starting to look a lot more like it's probable with this bear flag staring everybody in the face. So a yearly open test would have still had me bearish, right? Anything above that would have still had me bearish. However, damn it, I grabbed the line too quickly. However, I was wanting it to occur so I could get ready. Where is that? Right there it is. There's your January one. So there's your yearly open. So, That's what we were looking at for a target, and we're having trouble getting up there. Anything can happen in the next few days, but inflation is today, so that's what we're waiting for sure. And then we're not expecting a 50 BPS hike, maybe 25, but it could be a 50. So the market is pricing a 98% chance of at least a 25 BPS hike on this month. So that could be priced in. And if we get above this, then we can look for bullish entries up into about 55, 56K. But as long as we're under it, it's not looking pretty. Not looking pretty at all. Shop. Yeah, let me go look at Shop. Sorry about that. I read it once, and then if you haven't noticed, I get a little ranty sometimes. A ranty rant. I think moving on, once we got the new computer and everything's going good, we'll set aside a segment like the end of the stream. We'll call it Trade Talk Rants. All right, Shop looks terrible. This is another one of those companies that you know it's a good company because you can just look at the price history. It is an extremely, extremely good company. Here is every single one of this company's earnings reports. Green, 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 red. Green, 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 red. Green, and then you got a new one coming up. So out of all of its entire life, from 2015, this company has only missed earnings twice. That means they make money, right? That means they have the right leadership, and you can see it in price. This thing has been absolutely screaming to the moon, and it's only coming off because of, everything that's going on in the world. So where do we look to be a buyer? On Shopify. Well, here, what's a Canadian company, I think, ain't it? I'm not sure. 70% off. So you got to ask yourself this question. Do you think Shopify is a good company? If so, would you like to buy it if it was 70% off? If the answer is yes, then pick up some shares. Just a few, not a lot. Pick up some shares because we don't know how far this bear market's going to be. And make no mistake, when an asset is off 70% from its all-time highs, it is in a bear market. No doubt about it. Looking at this on log, it doesn't look as bad as it really is. This is how bad it really is. That is bad. That is a straight freaking drop-off. Nothing like this company has ever seen before. Okay? Let that sink in. You have never, ever, ever seen anything like this in Shop's entire history. So, why is that occurring? You have to do a little bit of diving on your part. Look up some info. Why is Shop selling off so hard? Google that. Find out why. See what some other people are talking about. See what Bloomberg's saying. See what other people are saying. And then make that decision for yourself. It is 70% off. Yes, in my opinion, with just what I can see on the chart, I think Shop is a good opportunity to buy and hold, not for a trade. Right now, you are in the death throes of a downtrend. Trying to pick that bottom is going to be very difficult. For instance, anybody that got long based on this, assuming this is the bottom, is now stopped out. And that can happen again and again and again. So trying to pick a bottom is almost virtually impossible, but since it's 70% off, it is a damn good buy, in my opinion. Now you have weekly support. You closed below it, so that means you got to look for the next one. Now you have a couple of them right through here. This was the March 2020 pandemic. Look how bad it got crushed in there compared to what it's doing now. What is going on in the markets is real, guys. For everybody out there that is still saying that we're not in a bear market, man, I'd like to know where they learned their stuff, because just that's bear. That is a bear. So down here, 421.62. If you get down there, pick up some shares. Not a lot. Don't do it with leverage. Just buy a couple shares. Just buy a couple. We don't know where the bottom's going to be, and, we don't know where. But Shop is a good company, and I'm sure. So back in the pandemic, it was $533 at the all-time highs. So, the Fed put us in a bind, right? They created this bubble. They created this bubble. That's what we create. That's what they created. So now they have to live by it. But I'm assuming if it had value here, it should have value here again, right? So those two areas, I think, are decent spots to buy a share or two, depending on your financial situation. If you're really, really broke, buy a half of a share. Some brokerages will allow you to do that. If you got money and it's not nothing to you, buy 10 shares, right? Buy 10 shares, just sit on them. In a year or two, you could double your money. Not anytime soon, but 2-3 years from now, I do believe this asset's going to bottom and turn around. Most of them do. Most of them do. But you are seeing something that has never been seen before on a lot of these stocks, guys. Never been seen before. Bad stuff. Hopefully they get it figured out. Hope isn't a strategy, but I use the word a lot. You know what I mean. All right, so let's see here. Oh, damn, it's 6:40. All right, guys, I got to wrap it up, unfortunately. I apologize to everybody at the bottom of the screen. I never make it to your guys' questions, so I apologize about that. But yeah, let me just sift through them real quick just to make sure there's nothing major. ETH for intraday retesting over res support. Do you use hourly close? Yes, absolutely. Yep, for intraday retests, hourly candles are your best. Wait on the close too. If you can get enough patience, if you're like using the 5-minute, 1-minute charts, if you can get yourself to that point to where you can be patient enough to wait on hourly closes, you're going to be a lot better off in your trading career. A lot better off. Because you're going to see stuff on the 5-minute chart that's not really happening on the hourly, right? Might see a big 5-minute candle, but you're nowhere near any hourly support or resistance. So just, stick to the hourly closes for intraday. Those are going to be your intraday support and resistance regions. I think yesterday was a risk on day. Yeah, I don't really look at risk off, risk on as far as each day goes. Risk on, risk off is something that takes a long time to happen, right? Yeah, you're going to get rip your face off rallies in bear markets, guys. It's going to happen. In bear markets, you're going to have candles that go up that are bigger than the bear market candles. It happens. It's called exhaustion. There's so many liquidations occurring on both sides of the market. It's very, very difficult to trade. That's why we take our trades on the outer edges of those retracements. So with that, I'm going to have to wrap it up. You guys have a fantastic day. As always, if you have any questions that I couldn't get to, you can drop them down in the comment section after this video posts, and I will answer it via text. All right? Have a fantastic day. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.